Okay. Hi, everyone, and sorry for the rushed lunch. It's rare that you have the same speaker speak twice in a matter of 2 hours, and I think I've pretty much run out of content, so you'll have to bear with me. A lot of this is going to be somewhat redundant with what we already discussed. But I was asked today to talk a little bit about venture capital versus ICO. And the topic seemed to be, at the time, much more relevant because if you remember back early this year, late last year, when ICOs were taking off like crazy, and people were talking about, is venture capital going to go away and everything's going to be ICOs, it seemed like a much more interesting topic then to talk about the future of venture capital versus ICOs. But as we all know today, it's much less exciting as a topic because I think we all realize that, again, ICOs are just going to be one of many financing mechanisms, and venture capital isn't going to go away anytime soon. So I'd like to start the presentation, and I'm hoping I can get some help flipping slides because I need to do my waving magic. Oh, it's right here. Thank you. So let me just give you a little bit of background, and the reality is, I'm much more experienced on one side versus the other. So I've been doing venture capital for about 18 years. I've been involved in some interesting companies over time, like Carbonite, Divix, PayPal, Pure Digital, and then on the fintech side, companies like Corbit and SoFi. My ICO experience is very limited. It's 9 months. Although I would say that in terms of relative terms, since the venture capital industry has been around for about 40 years, and then the ICO have been around for the past 3 or 4 years, I would say I'm relatively experienced at similar levels across these different financing activities. OK, so I'm going to borrow a slide, a quote, a tweet from a good friend of mine, Adam Draper. For those who don't know Adam Draper, Adam is a third-generation venture capitalist at Boost VC, and he's investing in ICOs. And you should just read this, because it's not as interesting for me to read this for you. But when I was putting this slide deck together, this was actually the case. And I'm not kidding you, where no product, white paper, raising 40 million, there's no way that would get funded. Reality is, right? And probably not even get seed funding for $2 million. But when they were raising ICOs, people were throwing money at these projects. And VCs who are on the late train of that rarely had access. So this was the reality only until like 2 months ago. This has changed. So I'm going to talk about a few topics. So the first one is, so where did this whole ICO craziness emerge from? What are the reasons? When did this happen? What's the history? And then I'm going to talk a little bit about comparing and contrasting the pros and cons between venture financing versus ICO financing. And then we're going to talk a little bit about the current trends. And my slides are already outdated, because the current trends are not the current trends. And then I'm going to conclude with some thoughts and suggestions of how entrepreneurs, as well as investors, should think about the financing options, including ICOs. So let's do this. OK, so we think about ICOs as some out-of-the-world phenomenon that's never happened to it. It's actually not true. So a few years ago, as we all know, there was a phenomenon around product crowdfunding. And raise of hands, who has participated in at least one crowdfunding campaign? Come on, there's more. I know 60% of these projects were never delivered, but we all were excited to participate. And a lot of companies and a lot of projects were financed through these Kickstarter platforms and Indiegogo. Now, we all are aware that equity crowdfunding platforms have become very popular as well. And we all know the success of AngelList. I'm sure everybody in this room has at least an AngelList account or has considered investing in an AngelList-listed company. If not, they have their private angel investment clubs that they're active with. And so if you think about it, token/coin crowdfunding is yet again a part of this crowdfunding phenomenon. And if you think about it, back in the day where it was almost a exclusive, privileged relationship, unless you knew somebody that knew a VC, it was extremely difficult for you to get access in front of venture capitals, right? And I think most people are aware of the fact that venture capitalists explicitly state, either in interviews, that they are not taking cold calls, and unless you can actually find somebody that knows somebody, that in itself is a test to see if you're able to execute on something as simple as finding a contact in your network that knows a VC, right? So cold calling never worked. Then it was a very limited channel, and if you think about it from a global perspective, there's only probably half a dozen markets in the world that have a very active venture capital ecosystem. While entrepreneurship and great ideas and innovation is a global phenomenon, a lot of those entrepreneurs are cash-strapped. They don't have a venture funding industry where they can tap into. So all of these crowdfunding activities are a great thing for entrepreneurship, and it opens doors and, as we all like to say, decentralize the access to venture capital. Okay. I'm sure some people in the room are familiar with some of these names. Obviously, everybody's familiar with Ethereum. But the first ICOs back in the day started with Mastercoin. Who in this room has ever heard of Mastercoin? OK, there's a couple. You're like shy about raising your hand. Mastercoin was one of the very early ICOs, and it has its ups and downs. And for a while, other ICOs, like MadeSafe, for example, which is a storage-based token, actually raised capital through Mastercoin. And so these early-stage first-generation ICOs were really started back in the day as almost community donation projects to better develop and better enhance the existing issues that the blockchain had. And so it wasn't the fundraising craze that we are experiencing today. It was more of a donation play where a lot of the early community and developers participated in. And then, obviously, Ethereum took off, and now we all think that, wow, Ethereum. But back in the day, they only raised 18.4 million, and I think the token sale price, according to a friend that participated, was 25 cents. So if you got in early on the Ethereum ICO, you're pretty good. You're set for a long time. But the commonality of these first-generation ICOs is that, again, a lot of these were development efforts, less on the application side, but more on the infrastructure side to improve some of the fundamental scalability, security issues that the blockchain had in the day. And those projects still continue today as well. Now, everybody is aware of this, but if you think about when the interest in Bitcoin and cryptocurrency and subsequent to that ICOs started to happen, it started to happen, and I know the text is too tiny for you to see, but it only happened about a year ago. That's when things started to really take off in terms of interest. So Google search word frequency on Bitcoin and crypto, it's only been about a year. So if you think about the history of these ICOs and token, we're still in very much the early days of this mass interest in this area. And it's actually awkward to say mass interest because we have to always remember we're in Silicon Valley, and the rest of the country and a lot of the rest of the world are not familiar with what's going on. A lot of people still think Bitcoin is some massive fraud scheme that people are just coming up with to basically pump the public for proceeds. I mean, there's still a very limited access and understanding of what Bitcoin and crypto is all about. So it's still early days. But this growing interest ultimately is what's fueling the whole ICO phenomenon. And as a result of that, as you can see in the stats, if you just look at the financing options between ICO token sales versus venture capital equity fundraising for blockchain companies, and I'll qualify this is blockchain-only companies. It's clear that since Q2 of last year, again, about a year ago, that's when ICO funding has hit the roof. And we haven't seen the Q1 numbers yet, but if you add the 850 million that Telegram just raised, it's going to actually be substantially higher. So that's what's going on. What's interesting is that while the amount, and this is a personal prediction, the amount will continue to go, I think the number of projects that are going to be funded through ICOs are actually going to drop. And I don't have the stats to show that, but we're already seeing, as I mentioned earlier this morning, that there is a flight to quality. So the number of ICOs that are able to successfully raise are less, but the ones that are raising are much more successful, and the amounts that they're raising are higher. So there's going to be, in my opinion, an increase in further equity capital raised through ICOs, but with fewer quality projects. OK, so I'm on the VC side, and what's going on in VC land related to all these ICOs? So venture capital funds are not ignorant to what's going on with ICOs and have varying degrees of acceptance and early adoption. It was the same for seed funding. It was the same for crowdfunding platforms. And it's the same for ICOs. There are always some pioneers that either had personal access or interest or connections that got them exposed early, that are willing to take the leap of faith sooner. And then there's others, the masses that follow onto what some of the bigger firms are doing. And the three different mechanisms for venture capital to get involved, one is they have decided that our fund was raised money to put in equity into technology startups, and so we're going to stick to that. But we would consider investment in a crypto specialized fund, and we would get access to the potential financial upside as well as deal flow through that. So that's one way. The other way is to just do it out of their fund, but get permission from the investors of that fund to be able to make those token investments, and then completely have a separate fund that's managed by a separate partner and whatnot to deal with ICOs. So all sorts of formats are happening, and this is a very hot topic within the venture community today. Now, some of the early believers, because they had access to the growth phenomenon. So as you know, Andreessen Horowitz, Union Square Ventures, two of the main leads in Coinbase. So they were already seeing through their investment in Coinbase, which was an equity investment back in the day, when they came out of Y Combinator. These were the firms that made that bet early on, and they were able to monitor how quickly the transaction volume was growing, and they realized that there would be interesting opportunities even in participating in ICOs. There were a few firms there that had privileged access through their investment in Coinbase primarily. And then on the other side, internationally, there was a number of Chinese firms that saw a similar phenomenon through their investments in some of the Chinese projects around blockchain and ICOs. And these are Zen Fund. This is Danhua Venture Capital. And then more recently, and this was quoted in the press, that when Telegram did their $850 million ICO, some notable Sandhill firms participated, including Benchmark, including Sequoia, including Kleiner. And so these were all projects that are interest. And for everybody else, it's very easy to point out to the fact that Andreessen, Union Square, Benchmark, Sequoia is doing this. We should have the option to do this. And so we're all talking to our limited partners to have the option to invest in token opportunities if it makes sense. Now, the reality is not a lot of these firms are going to make token investments because it's something that if you're not comfortable doing, if you're not familiar with doing, it just increases the risk. It's difficult enough to make successful equity investments. It's going to be harder for those folks to get comfortable to do token investments. But the good news is the doors are open. So there's going to be much less by the end of the year firms that cannot talk to ICO token sales projects because our firm doesn't invest in ICOs. I think that's actually going to open up dramatically during the course of this calendar year. OK. I'm going to talk about corporate interest in ICOs and crypto. And I think we talked about this morning, where Asia is much more further along in terms of interest, excitement, and acceptance, where some of these largest technology companies in Asia have publicly announced plans to do ICOs. They've already hired people. They have development teams that are working on this. And some of them have made it public, like Kakao, which is the dominant messaging app in Korea, Rakuten, which is the Amazon of Japan, and Line, which is, again, the dominant messaging platform across Japan, as well as Southeast Asia. They are all working on and have announced the potential launch of their token projects. And there's a lot of excitement around this, because compared to even the US, where messaging apps are popular, in Asia, messaging apps, and I'm sure many are familiar, messaging apps are your life. If it's WeChat in China, if it's Kakao, you can actually do everything you want pretty much, in addition to chatting and communication, commerce, purchasing, content consumption, and everything. And so tokenizing that is almost a no-brainer. And it gives them an opportunity to have further engagement and stickiness, as well as potentially have the upside from the tokenization. The other thing that's happening more recently, you have a phenomenon of experienced entrepreneurs that have done it before, that have done really well before, and are going back and doing projects around ICOs and are doing tokenization. So we talked about Telegram earlier. So I don't know if many people know, but the entrepreneur Pavel Durov is considered one of, I mean, he's kind of the Steve Jobs equivalent in Eastern Europe and the Russian region, where VK was a tremendously successful application, as you know, and Telegram has taken off like gangbusters, and it's actually become a global phenomenon, where because of the focus around privacy and security, a lot of the blockchain and crypto community communication, the preferred app obviously is Telegram. So Pavel has done it before, and his team has done it before. They're doing it again. And their ICO project that they're launching, that's why they're able to credibly raise the amount of capital they raised from some of the top-tier investors on Sand Hill. It's because the team knows what they're doing. They've done it before. They've already demonstrated application and usage. And so tokenizing is only a minor add-on for them to leverage that and basically create a token economy around their platforms. Eric, who's a good friend of mine, one of the co-founders out of LinkedIn, and the Hub Token project that he's working on is to create a decentralized version of LinkedIn, where you have reputation networks that you can follow and indexes that you can do across all the different platforms of services that you use. And it's in a decentralized manner so that no particular entity alone is going to take advantage and the economic benefit of you putting your information and your personal reputation online. OK, a lot of this is very obvious, so I'll just quickly go through them. But the obvious pros and cons for each category of ICO versus venture funding. So the first pro I put on ICO, it may not be completely true anymore. So it used to be that it was easier to raise capital, because literally you were selling the dream, so to speak. So with a white paper, with a team, with an idea. And when ICOs were hot, it's very difficult actually not to have a successful ICO, because people were actually investing based upon the fact that it was an ICO, and if you just put together a few notable advisors on your list and had a white paper that was relatively readable, then there were successful ICOs. That's going to be much less the case. But the things that are still true today, so in effect, by doing an ICO, and if you do a public sale portion to the ICO, you will get community support. Community is going to participate, and because they are token owners, they have vested interest to see the success of the ecosystem you're building. And so that's actually going to be a pro. You actually have the benefit of your customers, your supporters, participating and having ownership in the success of your project. And then obviously, we talked about it earlier, but you can launch an ICO and you can have investors and token owners across the world. And so while your equity fundraise is always typically limited to that 2-hour drive radius that most venture capitalists prefer to stay within, if you raise an ICO, you can have access potentially to investors all over the world. Now, on the venture funding side, and again, I'm biased because I'm on that side of the fence for most of my day job, I would like to think that venture capital does bring value in terms of company building experience, as well as the support that they can bring. And whether it's through the network to enable the right people to get hired to the executive team, or providing strategic guidance, or providing access to potential customers and partners for the solution that you're selling, that's what venture capital is supposed to do. Now, maybe not everybody does that, but I'd like to think everybody tries. Another important thing, and there were cases that I think were widely publicized where, I think Bernard this morning talked about a project where 30 million was raised in an ICO, and in less than 12 months, the 30 million was gone. How does that happen, right? And there frankly isn't a mechanism, if you're a token holder there, to go back and claim that there was any fraudulence and whatnot because the entity is dissolved. There isn't a board that has corporate governance and responsibility. And so the fact that with venture funding you have a corporate governance structure where you're incorporated, you have a board structure that ultimately makes decisions but also has accountability, then that mechanism is enabled by venture funding. And that's actually a core piece of what venture capital will bring to the table, is that structure and order. And then, whereas a lot of the ICOs will have issues because once you're liquid and your tokens are listed, and every day it goes up and down, whether it's because of your own announcements or overall market trends, it's actually very difficult to not be short-term oriented because announcements that you make impact that. And as you may see, a lot of ICOs post-ICO, some of the better ones and the smarter ones, they have this marketing campaign where they try to make announcements, and some of them are substantial, most of them are not, just to keep the awareness up so that they can maintain their ICO prices. There's an argument to be made, maybe the time and energy they spent on the public persona of the ICO would be better spent in actually building the product or the platform. And it's difficult to do that if you're checking your stock every day and it's going up and down. So being long-term oriented as capital, I think, is a benefit. Because as I said earlier, ultimately it doesn't matter the interim valuation or the interim price. It's when you exit is ultimately what matters, and that is driven by value creation. So I think the pros and cons, it's very obvious, and there are trade-offs for venture capital. So yes, there's benefits, there's guidance, there's support, but it is much harder to raise capital. It's very selective, and the amount of capital, if you think about the equation of effort and time put in versus proceeds from the fundraising effort, a successful ICO where you put in maybe a couple months of work, that can generate $20 million versus putting 6 months of fundraising effort to generate $2 million in an equity financing, there's a big gap there, right? So it's obviously a lot more difficult. There's going to be dilution in equity, so you will own less of your entity by taking venture capital because that's a trade-off. And then finally, you're ultimately going to be sharing control, meaning that the board, instead of the founding team alone, is going to be making decisions. And so you have to be comfortable with that. You have to live with that. And so that's why if you find the right partner that has the experience and the willingness to add value, then you're willing to actually share that burden and share that equity. But if it's not the right investor, maybe not. So I'm not going to bore you with the regulatory trends. We've heard about them, and it's just going to get more and more stringent. Now, clearly, this is a US phenomenon. Globally, there are different varying levels of regulation. And we've all heard the announcements coming out of China and Korea and other countries. There's two things, though. There's announcements, and then there's enforcements. And the reality is, while there are announcements, the enforcement of some of these issues have been very measured. Even in the US today, we heard from the SEC, now they've given out guidelines, and so enforcement will happen. But even in some of the other foreign countries that have had announcements, it's unclear what the enforcement mechanisms or timings are going to be. So the reality is the ICO bubble is bursting. I don't think anybody will challenge that today. Regulation, especially in the US, is really putting a damper on the blatant ICOs, and because of that, it's depressing the demand for tokens, and thus the token values are decreasing. I think we've all seen that. Many of the ICOs are now avoiding public sales because of the scrutiny from the SEC that they don't want to be categorized as a security, and thus potentially risk unwinding the ICO, which would be a disaster for any project. And because of this overall downturn in the value of Bitcoin, of Ether, and all the actual cryptocurrencies, the general interest from the public in terms of speculation of appreciation of these token values and cryptocurrencies, that's clearly died down. So there actually is discussion, and I've had access to a number of projects that have prepared for ICOs and realized with the scrutiny in the US, it may not be the best thing to do. And they're coming back to raising seed funding and back to venture capital. So these are my personal opinions, but I believe that the current ICO structures are not going to be as sustainable. There are going to be exceptions to this, where I said earlier, the quality projects are going to be successful, raising large chunks of capital, and they're going to have institutional investor support, like Telegram and others. But for a smaller project with a team that may not have a co-founder of Facebook or a co-founder of LinkedIn or whatever, they're going to have a hard time raising, I think, large amounts of capital. So I think it's going to go back to smaller ICOs, and it's going to be driven by milestones, so that you could do an ICO once, get to a certain milestone that you can deliver a platform, and there's really no reason for you not to do an ICO if you wanted to afterwards again. And fundamentally, though, despite all of the recent downturn, ICOs are not going to go away. As I said earlier, it's just one of many financing options that entrepreneurs can consider. Same alongside with taking debt, crowdfunding on platforms, raising angel funding and seed funding, and ICOs are going to be an option there. So thank you for listening. I know a lot of this is probably stuff you already know, but it's always good to kind of summarize and keep it going. Do I have time for a question? Maybe I'll take one, please.
Yeah, thank you for your presentation. With all the downsides from a venture capital perspective, investing in an ICO, I'm still trying to really struggle with why you don't have any equity, you don't have any control, so if you invested in an ICO, if you're speculative based on the coin going up, the company could be listed on NASDAQ and be huge, and the coin could die. So if you could explain from a venture perspective how that works.
Well, that scenario that you just mentioned is very rare, because typically there are going to be separate entities. There's going to be a nonprofit entity that manages the tokens or the coin, and then there's going to be the entity that is actually organizing and supporting and managing the project and the tokens overall. The success of one typically will feed into the other. So the scenario where one goes up and one goes down is just not realistic in many cases. The reason that investors would consider investing in tokens, as I said in the morning, there is expectation, because venture capital is all about making money. There is expectation that if they can add value to the ecosystem, and that could be by making more introductions to potential use cases, customers, partners, expanding, helping out the team hire the right people, then the token will naturally appreciate, and they will have a benefit of the upside from that token appreciation. But the situation is always going to be tightly coupled, because they are all focused on adding value towards that same token.
Let's give a round of applause. Thank you, Jay, for a fantastic description. I know you have to leave, right? He has to